Okay, let's start our section today. Today we will be dealing with a topic on budgeting, a question on budgeting. Oops, let me see. Okay. So this question is from the paper of Pearson Edisel, IAL, paper 2, accounting, from June year 2019. Okay, so why I choose this question is it is because we have to prepare the cash budget for 3 months, first 3 months of this business, and then the budgeted statement of profit and loss. Okay, a cash budget focus on receipts and payment, and the budgeted statement of profit and loss focus on income and expenditure. So we have to switch between these two concepts in order to get the answers correct. Okay, and then we have an evaluation question. Okay, 3 parts, very neat. Okay, so let's start. Okay, we'll read the question first and then we will mark everything down before we work on the answer. So for receipts, okay, I will use R. Okay, and then for payments, P. Okay, these are used in the, this will be shown in the cash budget, while I will use income for revenue parts, okay, and also expenses, E, for expense. Okay, income here. So let's start reading this question. We have this new business owner. Marina plans to open a new parlor providing manicures to customers. You are the accountant of Marina and you have to, you are given the following forecast relating to cash payments of the business as shown below. Let's see. First of all, we will have Marina invest 10,000 of her savings in cash. So this will be your receipts. Okay, because this amount is paid by Marina into the business. So from the viewpoint of the business, it is a receipt. Okay, and also bank loan of 10,000 will be received. Okay, so these are received. Okay, the challenge in this question is to distinguish between receipts and income, payment and expenses. So bear this in mind. Okay, and for this bank loan, it bears interest of 9%, okay, as an expense. Okay, but then if you read on, you will see how this bank loan is to be repaid. Repayment of the loan will be in 60 monthly installments of 240. There's something strange here because if you see 9%, 10,000 and 9%, let's calculate, it will be 900 per year for expense, and then for 60 months that means it is 5 years. Okay, that means you are going to pay 4,500 interest in total. But then if you multiply 240 by 60, you will find 240 by 60, it will be 14400, which will be 100 short. Okay, but I don't have to pay attention to this because, okay, you are told that for each of the 240 installment, it will consist of 75 interest and 165 loan repayment. Okay, with this 165 multiplied by 60 by 60, okay, 175, it will be by 60, 9,900, 75 by 60, it will be 4,500. Okay, so this 100 short will be from the principal. Okay, anyway, again, we can ignore this because what we are interested in is the cash budget for the first 3 months, and also the budgeted statement of profit and loss for the first year. Okay, so we just need to deal with the first year and the first 3 months. If that's so, this 240 installment, when we look at how we are going to pay in the first 3 months and in the first 1 year, we need 75, 165 only. Okay, so these are payments. 75 for the first 3 months, I mean for each of the first 3 months. Okay, it will go into our cash budget as payment for each month. Okay, and 165 again payment for each month. There's one more item we need to put in, that is, if it is interest, it is also our expense item. So 75 multiplied by 12 months, because for our Part B budgeted income statement, budgeted statement of profit and loss, we have to prepare for 1 year. Okay, so 175, 12, it will be 900 for the year, which is consistent with the 9% that is given to us. Okay, so this one, expense. The loan repayment will not go into our budgeted statement of profit and loss because it is a reduction of our liability. Okay, it's not an expense item. Just like for the 10,000 that we have borrowed from the bank, it is a receipt. Okay, it represents liability to us. It is not an income. Okay, so the first 3 items done. Okay, let us take a look at point 4. The bank has agreed an overdraft limit. Okay, we have an overdraft limit. Interest is to be charged on overdrawn balances at the end of each month at a yearly rate of 12%. Okay, if we are preparing the cash budget for each month, then we better take it and divide it by 12 to get the monthly interest rate. Okay, to be paid monthly on the first day of the following month. Okay, we do not know how much overdraft we have to wait. Okay, so next item. But then if it appears, it will be a payment item. Okay, let us mark it down first. Premises with a rental of 840 a month require immediate alterations costing 7375, which will be depreciated over 25 years. Okay, there are a lot of items here. First of all, we are going to make a payment every month, and also this rental will be our expense, so it will also go into expenses. Okay, and these premises require immediate alterations, which will be depreciated over 25 years. First of all, we need to pay for the alterations, but then this alteration is not an expense because it will be depreciated. It will be treated as a non-current asset. So 7375 divided by 12, it will be equal to 7375 divided by 25. 7375 divided by 25 years, it will be 295 per year. Okay, this is our annual depreciation for the alterations, okay, which will go into our expense. Okay, we have to be careful, okay, which go to payment, which go to expense, or they both go to payment and expense like the rental. Okay, but then still we have to be careful, because for the payment, for the cash budget, okay, it is monthly and we only need to deal with 3 months. But then for the budgeted statement of profit and loss account, it is for 1 year. So next item, this one done. Next item, premises will also be redecorated at a cost of 1450. So we pay for the redecoration, okay, and this is also an expense. Okay, it is an one-off expense. Okay, 1450 redecoration, a revenue expenditure, so it goes into our expenses. Okay, next one. Fixtures and fittings, furniture and equipment. Okay, these three are the same. Okay, they should be treated the same way. So let's see. Fixtures and fittings costing 4700, a payment. Furniture costing 2,900, a payment. Equipment costing 1,600, a payment. But then all these three should be depreciated, okay, over 20 years, 10 years, 5 years. Okay, so the expenses part will be the depreciation. Let us calculate 4,720, so 235. This is 290. 1,600. This is 320. Okay. Next one. Marina will sell nail accessories, polish and lotions to customers. The initial inventory of nail accessories will be purchased for 1,200. So this is a payment, as well as, okay, you can call it an expense, but to be exact, it will be a cost of sales. Okay, so this is part of the purchases. Okay, we'll see in later points that we have other purchases as well. But in the first month, we will purchase 1,200 of nail accessories. Next item, electricity, and then gas, and then water. All these are, of course, payments as well as expenses, but then they are given in different ways. Let us see. Electricity bill 125 per month. Of course, it will be payment payable in advance on the first day of each month as from month 1. Okay, nice. Just payment will be equal to expenses. Okay, payment for 3 months and expenses for 12. Gas bill will be 210 per quarter. Be careful, per quarter. That means for the 3-month period, we only pay once. Payable in arrears on the last day of month 3. Okay, so on in month 3, we pay one time only. It is a payment and also an expense, but then we have to calculate the amount for 4 quarters. Last one, water. Water will be 570. This time it is for 1 year. Payable in full on the first day of month 1. Okay, so payment in month 1 only for the whole year. And expenses for whole year, 570. Next, the business will be open for customers from the start of month 2. Okay, so the business start in month 1, I think in preparation status. Okay, and then in month 2, it will start to gain money. The following forecast information is shown below. The nail parlor will be open for 9 hours a day, 6 days a week, and then 4 weeks in a month. On average, each customer will be charged 25 for a manicure and spend £5 on nail accessories. So this will be your income, your revenue. There will be 12 customers per day. Okay, so you are given the number of hours, but then actually there is no use of that. Okay, so let us calculate. you are not told about when you will receive the money, so you should simply assume that it is for cash. Okay, you will receive the money right after your service to them. Okay, so revenue first. Revenue is in blue, is it? Yes. Receipts. And it is also income. It will be the same. Okay, so 6 days a week, 4 weeks in a month. So 6 multiplied by 4, you have 24 days and 12 customers per day. So you have what? 6 multiplied by 4 multiplied by 12. 6, 4, 12. You have 288 customers per month. Okay, and 288 multiplied by 5, you have 1440 only. Yes, I think so. $1440. Okay, and let me see 288 for 25. Yes, no wonder I think why is the revenue so low. Okay, again, we have 288 customers a month, and then for manicures, you will charge them 25 per customer. So it will be 7200 for 1 month. And then for accessories multiplied by 5, you have 1440. Okay, so for receipts, you start from month 2, you will have these receipts 7,200 and 1440 for each month. Okay, for income, be careful, there are only 11 months of business because there's no business in month 1. Okay, so next one, the markup on nail accessories will be 100%. That means for purchases of $1, you will charge them $2. Okay, that means, okay, if you are making sale of nail accessories of 1440, your cost will be 720. Okay, 1440 divided by 2. Okay, that will be your cost. Nail accessories sold will be replaced and paid for at the end of each week. Okay, so you are given the purchases of each month of nail accessories. In the first month, you have initial stock, initial inventory of 1200, and then for the following months, each month you will buy 720. Okay, purchases. Okay, so this one is payment as well as what color is it? Okay, expenses, but it is not expense, it is your cost. Okay, we just try to categorize. Okay, next page. We have so many items. Later you will see we have a very long list in our cash budget as well as our statement of profit and loss. Okay, so we still have 3 more items. Okay, you have one member of staff for rent share. will be employed by Marina, and she will serve half of your customers. Florencia will be paid commission only, earning 35% of the income from manicures and 50% of the income from nail accessories she sells. She will sell half of all nail accessories. Okay, so you have 50% for sale of accessories given to your staff and 35% for manicures. She will be paid weekly. That means you do not have to think about the timing difference. Okay? And starting from month 2, Marina will take drawings of 400 per month. Okay, 400. This would be payment only. Okay, but it is not your expenses. Okay, payment only. Okay, and for commission of the staff, okay, payment as well as your expenses. The bank has asked for certain documents to be prepared if it is to provide the loan and overdraft facilities. That means we have to prepare the cash budget. Okay, and also the budgeted statement of profit and loss. That's why we are working on this question. Okay, so I hope you understand all the points discussed. Let's take a look at this that I prepared in advance. Okay, so in this cash budget, okay, and budgeted statement of profit and loss, I have listed all the points that we have just discussed. Okay, for receipts, we have these 4 points, and then for payment, a long list. Okay, and then we have total receipts, total payments. Okay, and then net inflow, outflow. Okay, let me see why is the cursor not shown. Okay, here. Wait. Okay, yeah, it's here. Okay, and also you see for the budgeted statement of profit and loss, okay, it is a little bit shorter because some of the items are receipts and payment, but not income and expenses. Okay, so I haven't put any formula on the Excel yet. Okay, I will show as we finish this thing. Okay, so let's start this long list. Okay, initial investment. Okay, we know Marina is investing 10,000 and also making a bank loan, okay, of 10,000. Okay, and then nothing for month 2 and 3. Okay, next one. I would like to deal with the repayment first, because we will follow the order of the points given to us. Okay, next point will be the repayment. Okay, I hope you still remember. Let us go back to the question. Okay, so after these 2 initial investment, we have the repayment. Okay, we have 240 monthly repayment, and then it is split into 75 and 165. Okay, so let's input loan repayment. Loan repayment will be 165 per month, okay, for 3 months, and loan interest will be 75 for each month. Okay, these two will, oh, let me see first. I hope, okay, let's see how it is paid. The bank has agreed that And overdraft, no, not this one. Yes, I have misread. Starting, yes, starting on the last day of month one. Okay, I'm becoming a little dizzy. Okay, so let's go back. It is correct. Okay, so again, be careful. Loan repayment is not an expense. We pay, but then it is not an expense. It reduces our liability. But then bank loan interest is our expense. So let us put in the loan interest here. Okay, so it will be 75 for 1 month. Okay, and then multiply by 12. 900 for a year. Okay, we have also calculated this before as well. Okay, so next point. Okay, after loan repayment, bank overdraft we don't know yet. Okay, and then we have the purchase of non-current asset as well as rent. Okay, so rent 840. Okay, and then alterations, premises redecorated, and then fixtures and fittings, furniture, equipment. We will do all this in one batch. Okay, so rental will be paid every month, right? 840. So here 840. Alteration will be paid only once, 1450. Okay, but not in month 2 and 3. Redecoration where? Oh, alterations is 7375, and redecoration 1450. Okay, nothing in month 2 and 3. Oops, let me move my cursor. Okay, purchase of fixtures and fitting 24700, 2900, equipment 1600. Okay, nothing in month 2 and 3. Okay, so next it will be transferred to the budgeted statement of profit and loss. So rental first, premises rental. Okay, again for 12 months, so 840 multiplied by 12. Alterations, we have calculated before. 235, is it? No, 295. Fixtures and fitting, 235, 290, 320. Okay, we still have redecoration 1450. Okay, so these few figures done. Let's go back to our question. Okay, next will be the purchase. Okay, the purchase of nail accessories. Okay, so the purchase of nail accessory, we have two parts. The first part will be here, 1200. Where is it? Too many items. Okay, 1200. Okay, and then don't forget we have for the following months 720 for each month. Okay, first month different. Okay, so let us go back. Here, purchase of nail accessories will be 1200 for the first month, 720 for the next, and then like this. Okay, it will also go into purchases. Okay, so this is a little bit more complex. Okay, so 1200 for the first month, and then we have 720 for the remaining, and which is 11 months, 9120. Okay, closing inventory. If we are going to always keep 1200 and use and replace, okay, and that means our closing inventory will be 1200 as well. Okay, so in this part, if you refer to the answer key given by Pearson, it will be a little bit different. It gives opening inventory of 1200 and then purchases will only be 11 months of 720. I think it is incorrect. Okay, because at the start of the business, we don't have any opening inventory. We don't have anything. Okay, we don't even have money. So how come we have opening inventory of 1200? That is not making any sense. So I will not follow what is given there. Instead, it is part of the purchases. So 1200 initial inventory. I won't call it opening inventory, but it is initial purchase of inventory. Okay, and then closing inventory, it will be 1200. Okay, let me draw the format first. Okay, how can I? Yes, here. No, where? Why? What happened? Oh, anyway, I'll do it later. Okay, so next part, after purchases, let us go back to our question. Okay, after purchases, what else? Okay, it will be our 3 utility payment. Okay, electricity 125 per month. Okay, and then gas bill will be per quarter. Water bill will be for 1 year. Okay, we have to be careful about the time given. So let's put there. Electricity for per month, 125 per month, and we will pay every month. Okay, let us do it one by one. It would be 125 multiplied by 12. Gas. It is for 1 quarter and it is paid in arrears on the last day of month 3. Okay, so it would be 210 here, nothing in month 1 and 2. Okay, so gas will be 210 and multiply by 4 only for 4 quarters, not monthly payment. Okay, and then water will be paid on the first day of month 1, 570 for 1 year. It would be like this. Water 570 directly for 1 year. Okay, finish. Okay, we have finished most of them already. Next part will be our revenue part. Okay, as we have already calculated, it is not that difficult. Okay, our revenue, let us go back and look first. Okay, revenue. Business will start in month 2. Okay, and we are going to receive 7,200 for manicures and 1,440 for sale of accessories. Okay, so let us put in these 2 figures first. So nothing for month 1, and then 7,200, 1,440 here. Okay, like this. Good. So how about the budgeted statement of profit or loss? Revenue, manicures. Okay, I will put it here. Later you will see why. 7,200 multiplied by 11. Okay, why is there no... Wait. Okay, better. Formatting is important in accounting. So this is for 11 months only. Okay, don't multiply by 12. Okay, expenses should be multiplied by 12 because even if you don't gain anything, you still have to pay for your rent. Okay, so revenue, and then sale of accessory, I will put it in another column here. Okay, so it will be 1,440 multiplied by 11 again. Okay. Okay, so you can see I put the figures here so that, oops, how can I, please wait. Oh. Yes. And let me draw the format for you first. Okay. Okay. Okay, so this is again 11 months. So until now we can finish the first part here. Negative sum here. Okay, and then from this one we can calculate the gross profit for the sale of accessories. So here. Okay, it would be like this. Okay, so next part, what do we still have? I think only commission left. Commission as well as the interest on bank overdraft drawings. Okay, only 3 items. Let us deal with commission first. So manicures. The staff will serve half the customers. Okay, so that means, okay, out of 7200, she will serve half. Okay, making revenue of 3600. Okay, and then multiply by 35%. Okay, as the commission. So let us put it there. Yes, here. Yes. Nothing for month 1 for both manicures and accessories. Okay, and then for month 2 onwards, it will be 3,600 multiplied by 35% commission, 1260. Okay, also for the next month. Okay, so commission for manicures, 1260, go for 11 months. Commission on accessories. Okay, again, let us look at the question. The question says 50% of the income. Okay, that means 1440. 720 will be the sales from sales concluded by the staff. Okay, and then 50%, 720, 50%. Okay, let us put there. 720, 50%. Oh, 50%. Okay, you can see here that if you are given 50% commission on accessories, indeed the company is not making any profit there, because the cost is already 50% and commission is another 50%. Okay, anyway, okay, maybe Marina think it's okay to let the staff get more. Okay, so 360 multiplied by 11 as the commission. Okay, so last we have drawings before we can take a look on the balance. Let me see. Drawings, okay, would be, okay, here 400 per week. Be careful. I almost omit these two words, per week. Okay, 400 per week, that means 1,600 per month. Okay, starting in month 2. So nothing in month 1 because they are not making any money yet. Okay, so nothing in month 1. And then starting from month 2, it would be 1,600 per month. Okay, so let us calculate the total of those things. I think the overdraft will be in the first month because all are payment. Yes, you can see here. Okay, I have calculated total receipts and also total payment. Now I use total receipts, okay, and minus total payment. It will be negative 1,000 for the first month. Okay, so we don't have anything at the start of the business. Okay, let me scroll a little bit down here. Okay, because we only get the investment from Marina on the first day of month 1, and also bank loan. Okay, so nothing at the beginning of the business of month 1. Okay, so closing 1,000. Okay, here the formula will be the same. Okay, and then it will be like this. Okay, you can see closing balance will become opening balance of the next month. Okay, so let us look at how interest on bank overdraft is to be paid. First page of the question, where here. Okay, 2,000 overdraft limit. We can see we only use up half of it in the first month, and then for the other months we have positive cash flows. Okay, nothing to worry about. Just for start of businesses, we have to be careful with liquidity, with cash flows. Okay, so 12% we have already calculated that it would be 1% per month. Okay, to be paid monthly on the first day of the following month. That means if we have a bank overdraft at the end of month 1, we will be paying interest in the first day of month 2. Okay, so let us go back here, zoom in a little bit. Yes. Okay, so we are going to pay 1% monthly interest on this amount. Okay, nothing in month 1, and then in month 2, that is the start of month 2, we are going to pay for this. Okay, and multiply by 1%. It will be $10. Let us make it positive because it's a payment part. Okay, 10 here. Finish. Okay, and you see in the closing balance in month 2, it is a positive figure, so nothing in month 3. Okay, if that's the case, we have to conclude this one. What? Yes, here. Can we see it all? Yes, here. Okay, so interest on bank overdraft will be 10. And then finish. We have finished the whole question. Let me just calculate the final figure. Okay, so it would be total expenses. Okay, and then okay, and then this would be our profit, budgeted profit for the year. Okay, let me add one more word. It is the budgeted profit for the year. Okay, 52810. Finish. Okay, so this question is long, okay, with many items, okay, but the only challenge is to make sure you know the differences between receipts and income, and also payment and expense. Okay, if you can distinguish, if you are if you have a clear mind, okay, then it is not a very difficult question. Okay, it's just long. So these are the answer for this question. Okay, if you want, please take a screen capture of this. Okay, because we still have one more part to deal with. Okay, that is the evaluation part. Evaluate the use of budgets for a new business. Okay, so this is a very general question. We don't have to, really apply what we have calculated in part A and B. Okay, a general question about budgeting. Okay, not even to new businesses. For new businesses, the only thing is the only extra thing that we need to talk about is, first of all, the initial cash flow. We have to pay attention to initial cash flows because we have to make a lot of investment. Okay. Second thing, we don't have any historical data. Okay. Everything that we have calculated is based on our best estimates. Okay. So these 2 points are special if it is new business. Okay. Other things, it is just, general knowledge about budgeting. Okay. So let me also do this thing. Please wait. Okay, this one. Okay, our AI chatbot. Okay, please follow it. It's on POE. So let us ask the bot. Okay, evaluate. Let us see what it will give us. Budgets for a new business. I have taught it to keep answers short because I don't want anyone to copy a whole page of answer. Okay, so it focuses on the key points. You have to know how to elaborate. Okay, so if I just type in evaluate, okay, it just gives you a bunch of points. Okay, this is not what I want, not what we need, because if you have Pearson Excel evaluation questions, you have to write in both sides. So I will instruct it in a better way. Evaluate the benefits and limitations of the use. Okay, it will be better because it will give us benefits. Okay, planning, control, these are general points. Okay, just like what I said, general points, it helps you do this. Okay, goal setting, cost management, okay, future profit insights. Okay, you can add more points. I think, for example, better control of cash. Okay, and then for limitation, it is just estimate. It ignores all external factors. Okay, time consuming. You have to spend time and money and ask your accountant to, help you prepare this budget. And indeed, if you are the accountant of Marina, okay, you are not getting any, pay for your work. Okay, because in this budget there is nothing like salaries for the accountant. Okay, maybe you are paid only once at the end of the year, but you don't see the budgets of it. Okay, so it requires expertise. Okay, it is rigid. Okay, sometimes can be rigid. Okay, so you have this point. And you have to add the 2 points that I have just given to you, because at the start of any business, liquidity is important. Okay, and also because it is a new startup, you don't have any historical data to refer to. Okay, so this is all for today and all for this question. For budgeting, I think this is a good exercise because it gives you a very direct look at what you need to know about budgets, cash budget especially, and budgeted statement of profit and loss. Okay, cash basis, accrual basis. Okay, so that's all. If you have any question, you may ask here. If I see it, I will answer. Thank you.